following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope everybody's doing great today. Had a little technical difficulty starting this morning. Thanks for bearing with us. We're taking a look at Walmart, and what we're going to do here is we are going to start with the weekly chart. We're just going to, Walmart obviously has got some earnings this morning. And what we're going to do here is look at our weekly first. And as we look at this, we're going to take note that we've seen this orange weekly bar start to appear. And what that means, if you don't watch the show, is, and that started yesterday, actually Monday. So signifying new profile, new balanced area possibly going to appear towards the end of the week. And what I want to do here is just kind of do something you might find pretty interesting. I'm going to go in here to our indices on our scanner. I'm going to go into the, where's it at? The S&Ps that are completely on fire right now. But we're going to go down to Walmart. We're going to find Walmart really quick down here. And where's that? There it is. All right. So the cool thing is, we're in a downtrend. You see the red cell. It's been on a weekly. It's just decomposing on a weekly. I'll put it that way. So what we did is we put, instead of having orange cells pretty much flat out, which was leaving some information out, what we did is we said, look, okay, we're below profiles. We're below profiles pretty good, but we've got that hint of a new profile attempting to appear. So what this does is it gives you the orange notification kind of in a little hint format there to the right of the cell, especially on Walmart, that, be on the lookout that we, might have a new demand area appearing down below. And if you pull up our paragraph view, you'll see caution to shorts. Targets may be met in the interim. Trading range could be developing in the downtrend. Blah, 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 blah. Everything I said. The current long-term trend down can be assessed partly by any closes above 79.92 as initial technical damage. Okay, so we're just going to have to wait and see on that. But the cool thing is I can come in here and go, okay, new box, boom. And it's going to sort all those new weekly boxes attempting to appear. And I'm just going to assume Walmart's in here. Okay. So, a little bit easier to read, in my opinion. This color scheme is now a heat map in itself. Hope you guys get a lot of enjoyment when you start putting this into your daily regimen of trading. So we could start out with the S&Ps, but I'm going to kind of stick with Walmart for a second here. And, the news has come out. We've had some volatility this morning. So the 60-minute, this is our 60-minute. It's going to, somehow I've lost my daily screen here. Let me do this. Let me see if we can close this out and reopen it. How about that? Without saving it. Okay, we should be able to start a new chart here somehow. Senor Logan here screwed up his charts. We're going to get through that. There's our daily chart. So we're gonna pull up Walmart again. And this is the cool thing. Now on the scanner you saw it was saying top, and it was just a smidge above that profile. And this is yesterday's close on Walmart. I want you to take note of the inflection points. This is really cool. 79.92. Obviously that's the top of the box. The high yesterday was 79.94. Okay, the bottom of our daily profile. And this is why I'm such a huge fan of looking at daily profiles. That's, me and Eddie go back and forth about this, but I love the automated systems constructed around these pressure points on the dailies. That's my kind of hot point. So 77.89 down below on the bottom of the box on the daily profile. So remember that number, 77.89. We reached 79.92, reached 79.94 actually. Big deal, 2 cents off. 77.89 down below. So this morning, we have hit a low of 77.76. All right, so how far is that away from the daily infra low? So 77.76. And that number was 77.89. So, you know, we missed it by 13 cents on the bottom to the tick and 2 cents on the top to the tick. Now we're balancing pretty good off of these levels. So that's, you know, good case in point. Let the news come out. We talk about this a lot. Let the news come out. Let's trade the reaction. Let's just say you had some orders sitting around, if you were playing this earnings kind of report game, sitting around 77.89. You had to take only a little bit of heat, 13 cents worth of heat, which is not much on Walmart. And then you're, you know, getting some bounces up into 78, what is that, 50? So again, you know, these are levels to pay attention to. And the cool thing is, you know, by the end of the week, we may have actually another profile kind of locking in on the weekly. So you have some more leverage points here to kind of focus on. So that's the take on Walmart. Just wanted to kind of do a little primer on that because that's a stock in play. Now, this is something that's a little sad for me because I did this Bloomberg brief on the euro coming off the weekly unfair highs, and they haven't published it yet. So that's going to make me look like a Monday morning quarterback. So, but I submitted it this weekend. So we here's our daily situation. It's very, very coincidental to that dollar weekly unfair lows daily strength there. So again, you know, we talked about some targets down below initially of 111. We didn't quite reach that area, but we talked about maybe it was time to start nibbling. You know, these long-term inflection points and these big moves, these volatile situations, especially on the euro right now, you can't really, you know, completely wait for to the tick situations. We reached a high last week of 114.67. So again, within 40, 50 ticks of that unfair on the weekly after a, I mean, you know, approximate 1,000 pip move up in the euro, in a lot of people's face that were banking on par. And that's how you run people out of the kitchen on situations like that. So again, we haven't reached the targets down below. I fully believe we're actually going to get below 111 and revisit that 107 area on the euro. Didn't think it was going to happen that quick, but we'll be right back, guys.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to get the dollar out of the way here. This is, something that, again, case in point, just to kind of follow up on the concept we were kind of using with Walmart. The euro, we knew that the maximum leverage points were around 115 on that thing, and we're just licking our lips after we kind of crossed the 111 border. It was time to sit tight again and wait for the probabilities to be in your face again. And the U.S. dollar, I've been a big fan, especially some of the things I've written lately. Let's just wait until we get past 94, 94 and a half. Let's to get kind of our toe back in the water on the long side. I'm not so sure that, I'm a big fan that the dollar hasn't actually, there's always going to be pullbacks. You're going to have to look at technical damage as technical damage, but I'm, still a big fan of the dollar. It's kind of okay to be long, not okay to be short when you can. So the daily situation here, we had a new profile attempt to, start to, show the signs yesterday, and then lo and behold, boom, and we're coming right back up into that 95, 34, 35 area. Now, what does that mean? This is our daily. So let's go into the weekly. What the heck is going on with this? I don't know if we've lost. No, here we go. Okay. So, yeah, we lost connection for a second there to the servers we're using. So 94.46 and 95.46 weekly on for lows, 95.34 daily on for highs. What do? I think you look at that as a target-rich environment right now in the short term. Here's the situation on the dollar. Again, remember, this is the June contract. What in the world? Okay, we're gonna. Okay, we're having a little bit of a chart issue here. Okay, here we go. So as we look at the weekly view on the dollar, those weekly M for lows and the daily M for highs are kind of lining up. So you've got to look at that as a target-rich environment for trading the dollar right now on these kind of demand area bounces. So again, the long-term view, it's going to be critical to have a weekly close above 95, and we're looking at the raw contract. If you're looking at the continuous contract on the dollar, you may see a little bit slightly different numbers, and that's going to be a little bit lower. Weekly on for lows about the 94 and some change area. So again, it depends on what contract you're looking at. Remember, our information kind of compiles the data that it has before it, and what we're going to do with the dollar is try to make a little bit of a market call here. So again, meeting the targets, the 95.5 general area, what do? I think you just look at this as like, hey, we got a little bit of a victory here. We're getting back into major inflection points lining up. Therefore, in my opinion, not wanting to take the short side of this, we are going to just kind of sit tight and look at daily closes and weekly closes right now. Now, here's the 240 on the dollar situation. Again, I was kind of looking for a reason to get into this, and we got pretty good chance to nibble there. At the same time, we had that orange bar appearing on the daily. Now, is that like a textbook way of trading? No, I'm looking for reasons to get into the dollar, but I'm looking for, on the long side, I'm looking for reasons to also cut my losses if I'm, maybe getting a little too cowboyish and trying to jump the gun a little bit. So again, those stops for me were below 93.26 on this trade. Okay, so I was willing to kind of get into the collection area down here, but you got to be willing to say uncle on every single position you get into. You have to be willing to say uncle on every position you get into, unless it's like a super hedge with some kind of option strategy. And some of those option strategies can get away from you sometimes. Some of those, like this guy in Chicago used to tell, he goes, man, the butterfly ended up looking like a pterodactyl. And I was like, yeah, that's the way that works sometimes. Tell you what, let's get into the S&Ps really quick. We got about 20 seconds, 15 seconds before we go to break here. This has really kind of amazed me. This has been something that I haven't personally participated in on the long side. And there was a lot of reasons that we weren't participating on the long side. And we're going to get into those reasons and what do we do kind of now in the next couple of trade days. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and we're going to take a look really quick at the 10-year here, and we had some pretty inflammatory housing starts numbers that came out right now. I just want to reference this. We're going to get into the treasuries anyway, but here's the DMZ we've talked about. That's pretty rocket-like numbers that just came out, and 126. Let's just call it 127, coupled with this is our daily, coupled with our weekly numbers, 127.11, and we had talked about this thing kind of hanging in there, and then. This is the major support area. And again, turning the rents the same way. I mean, Courtney's been on the show actually as recent as yesterday, and we talked about the rate scene and, him saying that, possibly going into a new environment for rates that may be good on the overall scene. But again, that's not a timing tool type scenario. We look at the technicals, and I value everything that man says every time he says something. But, I kind of threw in at the end that we've got to just kind of let the technicals regulate the thing until we are able to combine those two notions. And, right now, I'm still kind of a fan of this thing on a long-term basis hanging in there. It's kind of proving me wrong a little bit now. It's a little bit of a breakdown. But again, I mean, stepping back, I mean, what are we actually looking at here? We're looking at the 10-year still sub 250. And, is that rates skyrocketing? I don't know. I don't think so. So we're looking at a big support DMZ down here between 127.11 and 127, and that's kind of where we're hanging out right now. All righty. So we got to hit gold. I mean, if you watch the show, I mean, I had a lot of guys in Asia talk to me about oh, gold's breaking out, the rate, the inflation, blah, blah, blah. And the inflation word, they don't even need to say that to me right now. So 1210, this is our daily situation. That's the support area that gold kind of used to kind of catapult into those weekly ultra highs. And we talked about trying to short something around 1210, and then we said I'm going to personally try to try this again around 1230. And if I can get my charts to come up, that'd be nice. We've had some connection issues here today. Let me, and they're boring themselves out right now. Okay, so I think we're getting back here. Yeah, here we go. So gold on the long-term weekly that we look at all the time, 1229 rounded off. We reached a high this week of 1232. So again, long-term inflection points, especially the weeklies, you got to give yourself a little room to breathe on those. A little bit of a noise factor. And again, I was just, some guys were saying, man, you should write on the gold breakout, blah, blah, blah. And, I didn't see it. And I think this thing kind of showed its hand a little earlier. Now, can we break out? Absolutely, we can break out. But right now, I think we're just kind of, best case scenario for gold bugs is 1210 will hold. If that doesn't hold, this is going to be pretty damning for the long gold trade. So again, I'm talking about if. Tell me something where I can use it. All right. So we talked about not getting too happy at the 1230 area and looking at it from the short side. What do you do now? Again, gold's pretty. When you have situations like this, gold's pretty directionless. I mean, we're in a DMZ between 1210 and 1230. I don't feel real comfortable about that. I'd love to see this thing get back down below 1210 and then just be able to, play the short game and let it explore some of the fair auction on the weekly and the daily at the same time. And what does that mean? That means that, we've got some targets down below the 1185s. Is it going to go that low? It can. But you got to be willing to stay uncle on any types of shorts above 1230 based on your appetite for risk, of course. I mean, there's some great opportunities to trade gold on the short term, and I'm going to maybe point some of that out. So, the regulation of the trade from, again, this is our 240s, and this is kind of one of my favorite ways to kind of figure out where the volatility component is relative to shorter term profiles, and then kind of where's the major breakdowns that are going to start happening. A lot of our automated systems will have what we call exit 6, as it's named in our library, where we use, again, the dailies are initial trigger points for a lot of things we do. But we look at the 240s and we give back some serious money sometimes by using exit 6. And what is exit 6? So we look at a long trade off of like a daily profile, and we say, okay, well, we're going to kind of let the 240s regulate this from a trailing stop standpoint type scenario. And what do? We set a percentage of this 240 box below this to let us kind of trailingly stop the trade out. And if you looked at it that way, 1230's up there. Now we're back into 1210, 1215. This trade would probably take profits from the long side, from that 1187 area, by getting stopped out or kind of profitably stopped out around 1207. That hasn't happened. So, again, we're still in the trade. It's still kind of let a fine wine breathe type scenario. You're never going to pick tops and bottoms. Rarely. It is going to happen. You're going to hit the lottery every once in a while. But again, that's what we've kind of realized. And we're able to look at historical kind of back testing on things like that and say, you know what, that ain't a bad idea. And we have some target goal things in those automation programs. But this is the best, one of the best ones is let the 240s regulate the trade. And I talk about it all the time because I'm a believer. All right, let's get into one of my favorite trades that I've been waiting for this thing to get a hell in a handbasket. And we talked about letting the November soybean trade get back up into those weekly inflows, retest the 940 to 942.5 area. I want to pull up our dailies. We had the breakdown, we went in the retest, and now we're back in the 930 area. Again, I'm a big fan of this going into the $8 a bushel and some change ultimate goals here. Weather's not too bad right now. There's some seeds going in the ground. So here we go. Let's take a look at corn while we're doing that. This is new crop December corn. And on the bean trade, I mean, I'm again stops oriented, got to be above 942.5 based on your appetite for risk. But again, we're going to take a look at the 240s. This is our daily on corn, and again, not a lot of technical damage from the 420 area. We've been down as low as 372 this past week. So let's go back to beans. Let's look at the 240s really quick on the regulate the trade down situation. So again, here's the 240s looking extremely heavy. Beans can go in your face if you traded them before, so always make sure you put your stops in. But this is going to be a nice another leg down, in my opinion, on the new crop beans. Okay, let's take a look at Netflix. Obviously, this thing's just literally in the ionosphere. And here we go. First time it's been above 600. So, and now, I got to tell you, here's the weekly on Netflix. Just amazing, huh? That's, what is that date? Since the first year, we've had a double. That's quite amazing. But look how those profiles kind of helped you out there. So, as we look at Netflix, what do you do now? Here's the daily situation. I'm terrified to go long this because you could have a 100-point pullback in a matter of 3 days, and there's nothing to hang on to, nothing to leverage off of here, way up top. But here's the 240s. Here's something you do have to hang on to. 618.5 is minor support on this. But again, I think you might have some shorting opportunities if we can get back down below 618.5. Now this is not for the faint of heart to try to short something like this. And the reason I say this is we don't have these many purple bars lining up in a row like this, and you've got a big wide profile here. Now this is kind of the innuendos of some of the stuff that we talk about that you really kind of have to have seen the movie before quite a few times, no pun intended, with Netflix, when it comes to trading and using some of this information. So when we have a super wide profile and we're sitting on top, a lot of times, especially with this scenario painted down below, you might have some trading opportunities here. And again, these are not things you sock away on the short side and go to Tahiti. And Tahiti's a long ways from here, by the way. You think I'm talking about Tahiti because it's in the backyard? Tahiti, look on the map. Tahiti's way the heck away from here, where I'm at. So, but again, these are little things that you can keep in mind for the future. And again, the scanner's got this in there, and you can kind of take a look at that without even having to look at the chart. And a lot of times, we use, we always say in some of the business that we do, we say, well, yeah, we want to do the Netflix model. And what's the Netflix model? It's almost like they've started a new coinage of phrases or whatever. I don't know how you want to say that, but the Netflix model in our mind is, we've got a charting package that we have worked on for over 2 years. I don't even expose it on the show here, but we always have let's just do the Netflix model. What's the Netflix model? The Netflix model is you make it so cheap that it's more of a pain in the butt to get it turned off and discontinue it than it is to just keep it on your credit card for $8 a month. I mean, it's like, I watch a movie every once in a while, and I don't know. That's the Netflix model, and obviously it's worked. So We don't want to reinvent the wheel. Here we go. The yen, again, not to just kind of pick out trades that are kind of working out, but this is one that I just love this trade. Again, that's dangerous to love a trade, but this 119.69 area now, and it showed that, there's a lot of things that correlate with the yen trade, and you can get on Google and look those kind of fundamental correlations and technical correlations up. But technically speaking, just singularly looking at this with a smidget of fundamental news, this is government backed, so to speak, and I just don't see a lot of things in the way here, and I easily see 121 in the near term future for this trade. And here's the 240s, here's the 60s. This thing's just, U.S. dollar strength right now, and the U.S. Economic situation is not hurting that devaluation of the yen. Okay, so the last thing we're going to look at is this pound trade, because this is something that was showing extreme strength for a little while here. But what do you do now? Okay, so let's kind of back up a little bit. And we talked about staying away from the short side on this trade when it came up into those dual time frame inflection points, namely around that 154.60. And then we had the massive pop, and that was as high as 158.15. So again, like a 400 pip move right after we talked about not wanting to kind of get short on this thing. But now we've got the massive move up and the massive pullback right back into that area. Now, is this an attractive situation to me? Without question. Is the U.S. dollar kind of powering up, and the British pound, obviously this is GBP USD or whatever they call it. So, is the dollar, in my mind, possibly going to go higher? Yes, but you've got a trading opportunity here, and that's what we always talk about. It's like, we don't, I don't take a lot of stocks home at night because I'm terrified holding them, but trading opportunities, yes, I'm a huge fan on some stocks, and that's why I use a scanner pretty much religiously to find those things so I can boom get the business pretty quickly. The pound, again, you've got a trading opportunity here. 154.60. We're trading right now, is the time of this show. We're trading 154.65. So again, we've come right down into it. The low today has been 154.47. Again, hey, getting asked for more, high probability trade in my opinion, and keep turning the wrench the same way. Guys, we are going to be right back and cover last 5 minutes. We're going to look at the S&Ps.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show, and we're going to take a look at the S&Ps really quick because we kind of avoided this. I just have missed a little bit of a north move here, but again, had been painful because I hadn't tried to step in on the short side. That was the daily situation. Here's the 240s, and we've kind of, again, last time we took a shot at this was around 2100. We actually made some good points here from 2103 down, but we started kind of nibbling on the short side again, just some inflection points we were trying to grab onto. And one of the things that we always try to avoid is just kind of blindly going out and saying, oh, it's gone too high, even though the breadth was showing some cracks in the armor that we look at on our task profile breadth indicators. And those are great, scenarios to leverage the, possibility that everything's confirming and it's, time to go short, time to go long. This time it was time to sit on your hands on the long side, and we started trying to do a little bit of shorter term, trying to nibble a little bit on the short side. And if I haven't said that enough times, just slap me. I'm babbling a little bit here, but I'm a little astounded that we've had this high of a move here without a lot of breadth cooperation from the beginning. So again, what do you do now? We've reached a high this morning already of, let's just call it 2134. Can't believe I'm even saying that right now. But again, looking at our breadth situation, these are our S&P breadths. Here's our paragraph here. Here's weekly, daily, 240, 60. We're getting pretty, and I'm going to pull up our charts here. This is getting The middle ground is what I'm a lot of times concerned about. I just still don't see the powerful, cohesive, internal type scenario that's going to push this thing much higher. So, again, can we come back down into a trading range? Can we get back down below 2110? In my opinion, we can. We've got some trading opportunities below 2123. If we can do that on the short side, again, you can't really, do too much until you get some confirmations. If you want to really be on the safe side, and this thing can go a lot higher, that's why you kind of wait for, again, you probably might be saying, Logan, what am I supposed to do? Sell low and buy high? I mean, what are you talking about? I'm talking about getting some confirmations relative to profiles, and right now we just don't have anything, especially this morning before those housing starts came out. So, where do you leverage this? In my opinion, you wait until some breadth numbers kind of roll over a little bit, and you wait until we at least you could start taking a scary short below 21.23, but a pretty confirming short, in my opinion, below 21.10. Now, the good news is if we start pulling back a little bit, we will have possibly, for the first time in a long time, I mean, good gracious, that's a long time. Is that the first? No, it's March. We may have some new daily inflection points appearing here, and that would be really, really cool to have some stronger areas to lean on. And right now, put a gun to my head, that's kind of what I'm waiting for. I'm not messing around with the 240s too much right now. I want to see a new supply area start to appear up here. And as you can see, this is our daily. We got a little bit of a divergent situation that pretty much has developed over this time frame, especially looking at our navigator here with our trend action. And again, all these things are pointing to, for the long-term investor, I don't think you should get caught up trying to buy the latest breakout in the S&Ps, and that's what we've been preaching for a while, because I don't think you've got the leverage on your side. Guys, you've been great, and Steve Rhodes is next, and you should hang around and listen to him. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.